Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 15th, 2025, and we are diving deep into Ethereum, which has seen some incredibly volatile price action over the last few days. First, let's get caught up on the news that's been driving the market sentiment. Multiple outlets, including the Motley Fool and CoinDesk, are reporting on a significant plunge in Ethereum's price. CoinDesk specifically highlights a drop below $3,100, attributing it to a massive $1.4 billion bleed from Ether ETFs and selling pressure from long-term holders. This negative sentiment was compounded by news from earlier in the month, on November 3rd, when a multi-million-dollar hack of the Balancer DeFi protocol caused a 7% drop, shaking investor confidence. However, it's not all bearish news in the long term. A report from 99 Bitcoins on November 12th quoted a former BlackRock executive who sees a potential future price of $5,000 to $7,000 for ETH, citing its dominance in stablecoins and smart contract activity. This creates a conflicting narrative between short-term pain and potential long-term gain, which is exactly what we are seeing play out on the charts. So, let's transition to the charts and see how these events have shaped the price action. Here on the daily chart, we can see the bigger picture for ETHUSD over the past year and a half. Notice this massive capitulation wick on August 5th, where the price plummeted to a low of nearly $1,900 before recovering. Since that low, the price established a gradual uptrend, making a series of higher lows through September and October. Then, in early November, we saw an explosive rally, pushing the price from around $2,400 all the way up to a peak near $3,450 on November 11th. This is where the sellers stepped in aggressively, and you can see this reflected in the series of large red candles that followed. The drop on November 3rd, which news outlets linked to the DeFi hack, is visible as a sharp 7% decline. More recently, the drops on November 13th and 14th directly correlate with the headlines about ETF outflows, taking the price from a high of over $3,400 down to a low near $3,028. This recent low is now a critical short-term support level for us to watch. From a structural perspective, we have a major resistance zone between $3,600 and $3,700, an area price failed to break just a couple of days ago and also back in late July. If we lose the current support around $3,000, the next logical area of interest for buyers would be the support zone around $2,800, which held up during the sell-off in late August. To get a better look at this recent, violent sell-off, let's switch over to the 1-hour chart and zoom in on the action from the past couple of days. Here, we can see the breakdown from the $3,400 level on November 12th much more clearly. The selling pressure was relentless through November 13th and 14th, with very weak bounces being sold into heavily. This waterfall decline culminated in the low of $3,028 on November 14th, which lines up perfectly with the major psychological level of $3,000. The volume during this downtrend was significant, confirming the strength of the sellers and the validity of the bearish news. Since hitting that low, we've seen a bounce, but the key question is whether this is just a relief rally or the start of a true reversal. The price is currently struggling to reclaim the $3,100 level, which could now act as short-term resistance. Now let's drill down even further to the 15-minute chart to analyze the most recent price action. This time frame gives us a microscopic view of the battle between buyers and sellers. After the sharp drop, we can see the price trying to form a bottoming pattern around the $3,050 to $3,100 area. We are seeing a series of short-term higher lows since the bottom was put in, which is a constructive sign for the bulls. However, each attempt to push higher is being met with selling pressure, indicating that bears are still active. The immediate resistance on this time frame is around the $3,130 mark, where the price was rejected just a few hours ago. For traders, a confirmed break and hold above this level could signal a move towards $3,200. Conversely, a break below the recent swing low around $3,085 would suggest the bounce is over and another test of the major lows is coming. Coming back to the daily chart to put it all together, let's discuss the scenarios for the short and long term. The short-term trend is undeniably bearish after breaking down from the $3,400 level. For the bearish case to continue, we would need to see the price fail to reclaim $3,200 and ultimately break below the critical $3,000 support zone. If $3,000 breaks, the next major support level to watch is around $2,800, a level that has been significant in the past. For the bullish case, bulls need to defend the $3,000 to $3,050 area at all costs. A strong bounce from this level, followed by a reclaim of $3,250, would be the first sign that the bears are losing control. A move back above $3,400 would invalidate the short-term bearish structure and put the focus back on the $3,600 resistance. Long-term, the picture is more nuanced. Despite the recent drop, the uptrend from the August lows is technically still intact as long as we hold above the late September low around $2,150. However, a sustained period below $2,800 would be a major warning sign for long-term holders. The bullish long-term case relies on fundamentals and the market shrugging off the recent ETF news as short-term noise. So, to summarize the key levels we're watching, critical support is at $3,000. A break below this is very bearish in the short term. Secondary support lies at $2,800. Immediate resistance is around $3,130, followed by a more significant zone at $3,250. The main resistance to overcome for a bullish reversal is the $3,400 to $3,600 range. Here are some potential scenarios to look out for. First, a bearish continuation, which I see as having about a 55% probability. This would involve a failure to hold above $3,200 and a subsequent break of the $3,000 support, especially if we get more negative news about ETF outflows. Second, a period of consolidation with a 30% probability. In this scenario, the price ranges between roughly $3,050 and $3,250 as the market finds a new equilibrium. And third, a bullish reversal, which I'd place at a 15% probability for now. This would require a strong, high-volume move back above $3,300, suggesting the recent sell-off was a bear trap. The key thing to watch in the coming days will be the volume on any pushes up or down and any further news regarding institutional flows into or out of Ethereum. And finally, a quick disclaimer. This video is for informational and educational purposes only and should not be considered financial advice. Trading and investing in cryptocurrencies involve significant risk, and you should always do your own research before making any decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.